In today's video, we're diving deep into the financial realm, exploring why 2024 might just be your golden ticket to getting rich. With rising concerns about inflation, interest rates, and a looming recession, many are gripped by fear. But what if we told you that economic downturns are not just challenges, but opportunities? Stick around, and we'll guide you through the strategies to thrive in 2024 and build lasting wealth. The golden opportunity. Contrary to popular belief, recessions are not the end of the world. They are a characteristic of economic cycles. Warren Buffett, the Oracle of Omaha, emphasizes that despite the ups and downs, the American economy is resilient. During downturns, the rich often get richer, and here's why. Check out this chart showcasing the S&P 500 returns during bull and bear markets. Notice a pattern? Every market crash is followed by a stronger recovery. So why fear recessions when they present opportunities for smart investment decisions? Economic forecast for 2024. Now let's delve deeper into the economic forecast for 2024, providing you with a nuanced understanding of the challenges and opportunities that lie ahead. Economic downturns often bring a cascade of effects, with unemployment, wage cuts, and decreased asset values becoming commonplace. In the face of these challenges, it's crucial to remain vigilant and proactive. Firstly, let's address the elephant in the room, the possibility of a global recession. Numerous factors contribute to this looming threat, ranging from extreme weather events to geopolitical tensions and corporate downscaling. The interconnected nature of today's global economy means that the ripple effects of these challenges can be felt far and wide, affecting everything from corporate earnings to supply chains. Take, for example, the tension between China and Taiwan. The potential ramifications on the semiconductor industry could send shockwaves through the global economy. Similarly, conflicts like the one between Israel and Hamas, though currently regional, could have profound global consequences. As companies revise their forecasts downward, anticipating negative growth, the recessionary risks are at their highest in a decade. In this complex economic landscape, the likelihood of layoffs becoming more common is high. Reports suggest that the United States is poised to lose approximately 175,000 jobs per month, according to Bank of America. Major companies, including Nokia, Paramount Global, Rolls-Royce, and Stack Overflow, are already implementing mass layoffs. However, in the midst of these challenges lies a silver lining. The ability to predict and navigate economic cycles provides a unique opportunity to strategically position yourself for lasting wealth. Golden opportunities for investors. Now let's dive into the golden opportunities that lie within the grasp of savvy investors amidst economic uncertainties. First on the list, real estate. While certain markets may experience declines, this doesn't spell doom for everyone. Vulnerable markets can in fact present enticing opportunities for those considering property investment. As larger companies play it safe and cut back during economic downturns, smaller, more agile businesses have room to thrive, reshaping the real estate landscape. Secondly, in times of uncertainty, cash becomes the ultimate king. Holding cash not only provides a sense of security, but also grants you the freedom to swiftly capitalize on unexpected investment opportunities that may arise. As the saying goes, cash is king, and in an economic landscape full of uncertainties, having liquidity can be a game changer. And let's not overlook the allure of gold, a timeless recession-proof asset. History tells us that gold prices often surge during economic downturns, making it a prudent choice for investors seeking stability. However, echoing Warren Buffett's wisdom, it's crucial to understand that gold, while a hedge in times of crisis, doesn't produce anything tangible. It's a store of value, a safe haven amidst market turbulence. The stock market advantage. Now, let's dissect the stock market advantage in the context of the economic challenges we discussed earlier. Recent declines in the three major stock market indices, ranging from 15 to 30%, have left investors on edge. Analysis from financial giants like JP Morgan and Goldman Sachs even suggests the possibility of another 20% drop from current levels. It's easy to succumb to fear and anxiety in the face of such market volatility. However, historical data dating back to 1946 provides us with valuable insights. The average bear market decline has been around 30%, with the most severe case in 2009 seeing a staggering 54% drop in the S&P 500 from its peak. Adding the onset of a recession to the equation amplifies the challenges, with bear markets experiencing an average decline of 34%. Yet, amidst this seeming chaos, there is a pattern. Historically, the absolute market bottom often coincides with a point where investors capitulate, a moment of despair. This despair, however, signals an opportune moment for savvy investors. It marks a turning point, indicating the potential for a recovery and subsequent market rebound, strategies for wealth building. Now that we've painted a comprehensive picture of the economic landscape in 2024, let's delve deeper into actionable strategies to position yourself for wealth creation. These are not just fleeting suggestions, but concrete steps to navigate the financial terrain. Hold cash. Maintaining a cash reserve is like having a financial safety net. In times of uncertainty, it provides security and the flexibility to capitalize on lucrative investment opportunities that may arise unexpectedly. Aim for a sweet spot of 15 to 20% of your portfolio in cash, ready to be deployed strategically. Cut expenses. Economic downturns call for prudent financial management. Scaling back your expenses isn't just a reactive measure, it's a proactive approach to weathering economic uncertainties. Embrace frugal decisions, maintain a lean budget, and actively track your expenses to ensure financial stability during challenging times. Secure your job. In times of layoffs and corporate downsizing, enhancing your skills becomes your armor. Actively seek opportunities for professional development, learn new skills, and showcase your value to your employer. By positioning yourself as an indispensable asset, you not only safeguard your job, but also strengthen your negotiating power in the face of workforce reductions. Diversify investments. Building a resilient investment portfolio is key to weathering economic storms. Diversification involves spreading your investments across various asset classes, such as large-cap stocks, international stocks, real estate, and passive income-generating assets. A diversified portfolio can mitigate risks and enhance long-term wealth accumulation. Think long-term. Following Warren Buffett's timeless wisdom, adopt a long-term perspective in your investment approach. Regularly investing or dollar-cost averaging has proven to be a successful tactic. Ignore the noise of short-term market fluctuations and focus on the enduring principles of long-term investing. Remember, the market has consistently recovered in the long run. 2024 might just be your year to get rich. Economic challenges can be turned into golden opportunities with the right mindset and strategic moves. Remember, while others panic, smart investors see a chance to thrive. Are you ready to seize the opportunities that 2024 has in store? Let us know in the comments below. Don't forget to like, share, and subscribe to No Money for more insightful content. Until next time, stay financially savvy.